What's up, guys? My name is Jack, and welcome to Invest Today. Today's topic is how much to start with. And honestly, the simple answer is as much as you realistically can. It could be as little as $500, which is it's honestly not a lot. If we look at this example, you take a 20-hour work week, which is very common for like a high school or college part-time job, and let's set it at $10 an hour. That gives you $200 a week. And that translates into $800 a month, which is some simple math. And let's say you can save 20% of that per month. All in all, that comes out to $160 per month saved. And to translate that into $500, it would take you just over 3 months to save $500. And that's very much on the low end, because if you're in high school, you're pretty much living with your parents still. And just to save 20%, it's not that hard to ask at all. So if you can save some more, definitely do that. I would recommend it. All that would do is just get you to that $500 quicker. If you can't save as much, try to do 10%. I don't really recommend doing anything less than 10% because it's going to take way too long, especially if you're only making $10 an hour and working 20 hours a week. So, and also, it's important to note that is assuming you have $0 saved currently. So if you have $0 saved and you're only making $10 an hour and working 20 hours a week, you can get to that $500 saved by just saving 20%. It'll take you just like 3 months in a week. So now let's take a little bit more realistic of an example, and let's take that same $500 and now let's turn it into a 40-hour work week. And let's bump it up to, let's say, $15 an hour. That gives you $2,400 a month. It's not too bad, especially if you're doing maybe, let's say, a college or high school still. Maybe in the summertime, you can pick that up for sure. Now, if you save 20% of that, that means you're ending up with $500 in just over a month of savings. That's not bad at all. Now, take that and extend that a couple months longer. All of a sudden, we're working into the 1,000s, 2,000s, 3,000s, etc. And that's how you really start to build your portfolio. And it's very easy to just get started. Try to get $500 is what I recommend. Now, I want you to build an account. And this is going to be over time. It doesn't have to be in one lump sum. It could be over the course of, let's say a couple months. But I want you to get an account with like $2,000 in it. Now, you can invest with $500. That's no problem. I mean, you can invest with 10. You just got to, buy a share of a company that has a stock $10 or less, pretty simple, especially if you're on the Robinhood app, as we discussed, $0 commission fees. So, but if you get an account, build it up over time with $2,000 in it, that can easily translate into 4 good, solid stocks while holding 20% cash on the sidelines, waiting for new buying opportunities. And that's what I truly recommend. Get that $500 first, but then really try to get it up to the $2,000 mark. And again, with the $2,000, we don't want to overextend ourselves. So let's look around, let's say 4 stocks with the $2,000 and then keeping 20% of the $2,000 on the sidelines, because it's extremely important not to put all your money in the stocks immediately and have $0 on the sidelines to invest again. Because then, if those stocks go down, you have no more money to funnel into the stocks, and pick them up for, let's say, a better price with a lower PE ratio and all that stuff. So it's really important. I like to hold around, 20%, 18%. It really depends on the market conditions. Sometimes, if there's a correction in the market, I'll go down to 10% cash. And then as the stocks rebound over time, I'll start trimming some positions and then get back to like that 18 to 20%. It's the magic number for me. A lot of professional stock money managers use that 18 to 20% rule. So it's just good because it gives you some security. If a company you like, let's say you buy it at $100 a share and the fundamentals are good, you do your homework and all that stuff, and it goes down to 90 or let's say 85, use that 20%, use a little bit of that 20% and buy some more shares. So when it does go up, because the fundamentals are good and the business model is good, you end up profiting only more. And I want to talk about some milestone markers for an account. The first one's $500. Very easy, very realistic for everyone to get to. High school, college, don't care. 500, very easy milestone. Just again, use some simple math, some good calculators, figure out what you make, figure out how much you can save, and then just be disciplined and put that to the side, and you'll be there in no time. Next one's 1,000, then 2,000, then 5,000. $2,000, like I said, that's where you could really start building a good like 4 stock portfolio. And then 5,000, you can start, thinking maybe more in the range of 5 to 6, and then 10,000, 15, and 20. And that's, once you pass that $20,000 mark, you're starting to play with some real money there. And that's not to be taken lightly. And you really have to do your homework and really know about the stock market. So if you don't have a ton of money to invest, try to get up to 2,000 and then play with that money and see if you can get a return and start learning more, watch some more YouTube videos on this channel or other channels online. Jim Cramer, The Street is great. Watch some CNBC and just acquire more information because it's only going to get you better. And when you feel comfortable, especially if you're just starting out, then we can start putting more money in the account and let's say getting up to, $5,000 or $10,000. So that begs the next question. So how long does it take to really get you to those markers, those like investment goals that you have? Now, let's take those $500 and give you a conservative 6% annual with no further contribution. So you don't invest more, you just have $500 and you end up getting 6%. A little conservative, but hey, it's still a good 6% that you wouldn't otherwise get. And you end up with $596 after 3 years. That's nothing. I mean, that's absolutely terrible. So the point I'm really trying to harp on in this example is you need to continue to invest and put more money away. Once you get to the $500 mark, it's not like, hey, I did it and now I'm just going to invest that and make millions. That doesn't work that way. You have to continue to invest in those accounts. So again, $500, 6% annual return with no further contributions. End of 3 years gives you $596, and that's obviously with the compounding of that. That's how I get that number, and that's also adjusted for a 25% federal tax rate, 6% state tax rate, and a 2.9% inflation marker, which is very standard. All those numbers across the board, pretty much right down the middle of what they historically have been. Now let's take that same $500, and you want to reach $5,000. Like that's your goal or more. And you have a conservative, the same 6%, that's a good return, but it's not, the 8s, the 9s, the 10s of the world that sometimes you see, or even look at 2017, that was a, over 20% return. That was an amazing year for sure. Everyone made a lot of money on that year. So you invest that $500 in every quarter, so 4 times a year, and this is all adjusted for the same inflation. You add in more money. You invest $500 more every quarter, and that's what you do. And then you can make $7,200 in 3 years. So $7,200 in 3 years, the same amount of time, but the only difference is now you're still getting the same return as the first example, but you're putting $500 more away every single quarter. So 4 times a year, put away $500. You get that 6% return. It compounds in 3 years to $7,200, and that's how you really start to see great returns on your stocks. And that's really how you start to generate wealth, because then that $7,200 you keep investing and it compounds over time. And it starts slow and you're not going to see great gains right in the beginning, but that's okay, because especially if you're starting young, 18, 19, 20, whatever it is, even 30, no problem. It'll start out slow, but then it's going to take off, and totally that's when you're going to start to make your money. That's all I have for today, guys. Thank you very much. Please click the subscribe button right here. Throw me a like, throw me a comment. I want to hear how you guys are doing, exactly how much money you're putting in your stocks every quarter, month, whatever it is, every year, and some of the returns you're getting. Tell me your best stock. I want to hear it. Thank you guys, and I'll see you next time.